Well, welcome everyone. Good morning, and thank you so much for joining us today. My name is Kim Hunredson. I'm joined by Deb Nelson, and we are going to talk about the Form 990, a powerful tool. For those of you who are here, you probably realize that this is the second presentation in our nonprofit board best practices series. So we will be talking about the 990 today from a board's perspective. So things that we feel that it's important that a person that serves on the board of directors understands about the Form 990. As I mentioned, my name's Kim Hunredson. I'm a partner in charge of Eide Bailey's exempt organization tax practice. Deb Nelson's joined me, and Deb is a partner in charge of our nonprofit industry group, and also as a tax partner working specifically with exempt organizations. Deb and I will both say that we are self-proclaimed tax geeks. We love the 990. I know a lot of people think that's really weird, but we actually do. We spend all of our time working with clients in the nonprofit industry, and a significant part of our time helping clients complete their 990s, but also consulting around it and helping organizations understand what kinds of things make their 990 a stronger document. So that's what we'll be sharing with you today. We do know that we could probably talk about this for a couple of hours, but we also know not most people probably wouldn't want us to do that. So we will be flying through this material. As Amy mentioned, please feel free to put any questions you have in the Q&A. We'll try to get to the questions as we're going through this, but in the interest of time, if we can't get through things, we will address them either at the end or we'll follow up with emails. So with that, what we're hoping to accomplish today, why does the Form 990 matter? Who's looking at it and why? And then we'll dive into the actual 990 and we'll touch on the things that we think is most critical for board members to know about the form. So with that, why does this form matter? I think the key thing for people to understand is this is, while it is a tax form, it's not a tax return. In other words, we're not calculating tax on this form. It's really an informational return. So as you're aware, there's a lot of information in this form that really has nothing to do with financials. And instead, it really is information that helps to portray the organization and its activities. It's also a public document, so it is the only document that your organization produces in many cases that's required by law to be made available to the public. So what that means is you are required, due to the public inspection requirements in the code, that you have to have this return widely available. If anyone asks you to look at your 990, you are required by law to provide them with access to your 990. If they ask for a copy, you can provide them a copy. You can pay or have them pay for reasonable duplication and postage, but you can't charge people to provide them a copy of your return. It's also going to be widely available in other places, which Deb is going to talk about. And it is a primary source of information on your governance, your operations, your programs. So it's really important to make sure that this document properly portrays the organization. There are penalties for incomplete or inaccurate returns. In other words, you can't just choose not to answer questions or choose not to include information because you don't want people to see it. Those penalties are on the organization, but also on responsible individuals. We have them listed here depending on the size of the organization. So the smaller returns, the 990 EC, it's a $20 per day capped at $10,500. Or $105 a day, capped at $53,000 for those larger organizations. So that is something to keep in mind. We will say we typically see these penalties being applied in situations where returns are filed late. There are abilities to get these penalties abated, but I wouldn't rely on that. I would say get your returns filed, make sure they're filed timely, and make sure they're complete. So the return is required by the IRS. It's also required by a lot of states. So many states where you're having to file registrations with are going to ask for a copy of your 990. And the IRS wants to see this because it informs them about your activities and it allows them to ensure that you're maintaining your tax exempt status. Now there's 3 different Form 990s that are out there. The small one, the 990N, is for organizations with average gross receipts of less than $50,000. This is actually a postcard that gets filed just directly on the internet. There's about 7 questions that have to be completed. It's a pretty simple form, but you are required to file that even if you are one of those very small organizations. The next one is the 990EZ, average gross receipts of less than $200,000 and assets of less than $500,000. If you don't fall into one of those categories, you get to file the 990, the big form. So understanding which of those forms you're required to file is important to make sure that you're getting the accurate information to the IRS. And then failure to file for 3 consecutive years actually results in the loss of tax exempt status. So this was a change, boy, it's been 12 years ago that these rules went into effect, because before that, organizations, those very small organizations, didn't have to file a 990 if they were under the 50,000 gross receipts. So many organizations were out there, the IRS wasn't receiving anything from them on a regular basis, and so they didn't really know if those organizations existed or not. So rules went into place saying everyone had to file, and in that first filing deadline, so in May of 2010, about 275,000 organizations had their tax exempt status revoked. Even now, we're seeing that almost 30,000 organizations on an annual basis are continuing to have their exempt status revoked, which means it could be those very small organizations, but we've actually even seen larger organizations where something happens within the organization, they think they filed, they've got change in leadership and things get missed. So this can happen, and we do see it. There is a process for getting that tax exempt status reinstated. It's an expensive and time-consuming process, so you don't want to have to go through that if you don't have to. But we do see that about 20% of the organizations each year ultimately do get that tax exempt status reinstated. And with that, I'm going to turn it over to Deb.
Great, thank you, Kim. So now we're going to focus in on who is looking at your 990 and why. So the IRS regulations, as Kim mentioned, require that nonprofits make certain documents available for public inspection. So you should have a copy of your exemption application, which will be either a Form 1023 or a Form 1024. If you do not have that on file, there is a form that you can use to request a copy. And that form is Form 4506-A, and you can use that again to request a copy from the IRS. And you can also use that same form to request a copy of your IRS determination letter if you don't have that on file. And you are required to have your current year 990 and 2 prior years available. And Kim touched on this, but we want to make sure that those copies are the public disclosure copies. So if anyone is coming and requesting that directly from you, you should have a copy that's labeled a public disclosure copy where any names and addresses of your donors are redacted from the Schedule B. And if you're exempt under 501c3, you're also required to have your Form 990Ts available for public inspection. And this is the form that's used to report any unrelated business income that you might have. And that again is your current year 990T and the 2 prior years. And so now that we've talked about the requirements to make your 990 available, who is actually accessing it? And I think most people would say people are accessing it without them even knowing it. While you're required to make those documents available at your main office site, there's so many other avenues that people can go to access these documents. GUIDESTAR has probably been the most popular over the past years. And if you use GUIDESTAR regularly to view 990s, you may have noticed there have been some changes to their site. Specifically, they have changed some of the benefits based on the type of subscription that you might have with them. And they also added a new website called the 990 Finder. So the 990 Finder is free and allows for unlimited searches of 990s, while a basic GUIDESTAR subscription, which is also free, limits you to 20 searches and only 10 profile views of organizations. So I just want to point that out in case you're questioning why your access may have changed. And there's also an IRS tax exempt organization search tool. And this is a new site where you can now access 990s and IRS determination letters for newer entities. And ProPublica's Nonprofit Explorer is a searchable site where if you are looking for maybe a specific board member and you want to know what entities this individual has served on, you can go to this searchable site, type in the name of that board member, and it's going to pull up any 990 where this individual's name has been reported. So it can be a really powerful search tool if you're looking for some of those more specifics within a 990 filing. And then of course, there's access on your website if you're making that available, or individuals can go to the Attorney General's office and access copies. And so who are these people that are actually looking at your 990? There are, of course, the regulators like the IRS and state agencies, but you also have sophisticated donors as well as funders who may be interested in the information. And let's not forget about media and watchdog organizations. We actually have received calls from media that are wanting to get more information around certain disclosures that are within a 990 filing. So that does happen. And you know, there's also, I think, a lot of cities or states that run articles on an annual basis where they're showing the top paid CEOs of nonprofit entities. They're pulling that information directly from 990s. And we're going to touch more on the watchdog groups as we go through this. And so now that we have an idea of who's looking at your 990, what are they actually looking for? Donors and funders and board members may be accessing it to simply learn more about your organization. As Kim mentioned, these documents have a lot of non-financial information. So they might be curious on how you're responding to certain governance questions or just how you're describing the programs that you operate. Watchdog groups use it to evaluate you by applying their own standards and benchmarks. And the media may be using it to gather information for a story. So maybe they're looking for certain transactions amongst your board members or how you're spending your charitable dollars. You know, there's lots of different reasons people can be looking at this. And you yourself may be accessing other organizations' 990s to do your own type of internal benchmarking against your peers. So I think it's good to just be aware of all of the different viewpoints and reasons why someone may be interested in this information. Kim and I spend a lot of time looking at 990s, and we will often see reporting that, you know, raises some questions or that we think, I don't know if that's quite accurate. So when you're looking at your 990, I would suggest that you not only look at it from the technical perspective, but also take a step back and look at it from a public perception standpoint. So putting in, you know, standing in the shoes of those individuals that we noted, such as donors or media, and how does your organization look from that standpoint? And I mentioned watchdog groups or charity raters. So who are they and why should you care? We're going to touch on these three today, which are probably three of the most popular ones that you may have heard about. And so my first question for you is, have you ever actually viewed your organization on GUIDESTAR? GUIDESTAR is known as the world's largest source of information on nonprofits with more than 10 million visitors. Their site has information on more than 1.8 million tax-exempt organizations. And as I mentioned, I think over the past several years, they have been one of the primary sites where people go to access 990s. And a fun fact is about 2/3 of the people who go to GUIDESTAR will actually look at one or more Form 990s while they're there. And if you haven't been out on GUIDESTAR, when you search an organization, this is going to be the information that appears. So notice the platinum designation under the name of the organization. We're going to touch on that in a minute. But here, so if I go into GUIDESTAR and type in American Cancer Society, it's going to pull this up. If I click on this, it's going to bring me to their profile page. And this is where you can see more information on their mission, what year they actually got tax exempt status, if they have an IRS filing requirement, and then you can actually access the 990s from their profile page. And GUIDESTAR is known for their seals of transparency. So remember that platinum designation that I pointed out on that previous slide? That's part of this program. So it starts with bronze, and there's a silver, a gold, and a platinum level. And each higher level means that the organization has provided additional information and is deemed to be more transparent. So that's kind of the process behind these seals of transparency. Is GUIDESTAR wants you to claim your profile, go out and provide more information yourself about your organization. And if you go into the American Cancer Society's profile page, you'll be able to clearly see what information is provided by the organization versus what is being provided from GUIDESTAR from your 990. It should very clearly state the source as being self-reported from the organization. And so if you haven't claimed your profile or updated it, you should consider doing so. It's free. We had the link there that can walk you through how to do that. And I think more importantly, it's good to know where that information goes. So your information is shared with more than 200 charitable sites, including Amazon Smile, Facebook, Network for Good, and others. And it's a way to get your most current data pushed out to thousands of users. So there's a lot of private foundations or donor advised funds who have a certain subscription level where they're able to access this data from your profile. So again, something to consider. And in the least, I think you should go out and view your organization. Then we'll talk about Charity Navigator. So they are America's largest charity evaluator. They rate 501c3 organizations that have been in existence for at least 7 years and file a 990 with at least $1 million in revenue for 2 consecutive years. And in addition, you have to have at least $500,000 in public support. So they have some very specific criteria for how they're determining which organizations they're going to focus on. They do specifically say that they do not rate land trusts, hospitals and their foundations, higher ed entities, or fraternity foundations. So I think that's important to know. Not every organization, even if you meet this criteria, will be found here. And Charity Navigator rates charities based on financial health metrics, as well as accountability and transparency. You're going to hear a lot about transparency today as we talk through things. The financial health evaluation is based solely on information provided in 990s, while the accountability and transparency information uses the 990 and also information posted on your website. So if you're interested in the specifics of what they use in each of those categories, you can go out to their website and they have very detailed information on their process for rating charities. And Kim, if you want to go to the next slide. The result of their evaluation is done using a 4-star rating system. So you can see 4 out of 4 stars means you're considered exceptional. While there's a 0 or even a cannot rate, which I think if your organization is, appearing on their site with those designations, that could cause some concern from donors, funders, or other individuals looking at your entity. And then here's a screenshot of what pulls up on Charity Navigator's site. We searched the same organization, American Cancer Society, and you can see they have an overall score of 3 out of 4 stars. So that is going to be one of the higher rankings from the evaluator. And if your organization falls within those criteria where you can be evaluated by Charity Navigator, I would encourage you to go out there and pull up your organization so you're at least aware of how you're being portrayed to the public if someone else is doing that same search. And lastly, we'll touch on the BBB Wise Giving Alliance. So they are also a national charity monitoring organization, but the difference here is you actually have to self-enroll to be evaluated by them. So any national soliciting charity can do that self-enrollment. If you solicit more on a regional basis, you won't qualify for the national evaluation, but nearly half of the local BBBs in the US have a local charity review program, so you could look to them to see if you can be evaluated at that level. And again, it's a simple enrollment process. You complete an online questionnaire, they'll evaluate you, and then they publish a report on give.org. So these are really the three primary sources to have some awareness on. And when you go out to their site, this is what it would look like if you were searching for the American Cancer Society. So they use 20 standards, and they're grouped into different categories that you can see there. And each standard is assigned a finding. So you're either going to be reported as meeting the standard, not meeting the standard, did not disclose, or that it's still being evaluated. So whether you believe that people care about these ratings or not, I think it's still important to at least have the awareness of how you are appearing to the public.
Great, Deb. So before you go, maybe we'll take a couple minutes for a couple questions that came in. One of them was with respect to Charity Navigator. Do you have any perspective on whether a score of 100 is very common in looking at stuff out there?
My perspective would be that's probably very rare to achieve a score of 100. You're scored both on the financial aspect, you have a score, you get a score on the accountability and the transparency piece, and then that creates an overall score. So in my experience of looking out there, I would say that's very rare.
And I would agree. I think it's pretty hard to get to that kind of perfect score. As much as we want to think all of our nonprofits are perfect, there's definitely some factors in there that would probably keep most organizations from getting to that. I'll throw another one at you with respect to the public disclosure copy of the 990 and what kinds of things can be redacted in that public disclosure copy.
Well, the only information that is to be redacted is related to the Schedule B, your schedule of donors, and that would be the names and addresses. So you're still going to have the dollar amounts show up on that schedule, but people just won't be able to see where that's coming from. Everything else should be included in the return as filed with the IRS.
Exactly. And then another question on just the timeline for submitting 990s. So all the 990s are due 4.5 months after year end. And then an organization can request an additional 6 months of extension. So if you're a December 31st taxpayer, May 15th would be your original deadline, and then November 15th would be the extended deadline. All right, well, with that, we're going to jump into the 990 itself and really focus on the areas, as we advise boards, where we think you should spend the most time looking at the 990. So many times when we'll deliver a 990 to an organization, you know, it can be a pretty thick document. I've got some that are over 350 pages, and to plop that down in front of a board member, or in most cases, we send that via email and say, here's your 990. Do you think that everything's correct? You know, that's a kind of an overwhelming thing for a board member. So we like to say, you know, there's definitely key parts within that return that we think are important, that we think, one, they're important because of the transparency that they provide, but also, as Deb mentioned, there's that public perception. So we want to make sure that we're focusing on providing complete and accurate information that properly portrays the organization. So we're going to start with page one. Page one is really a snapshot of the organization, and it pulls most information from other parts of the return. But we gave you 3 examples here of one part of part one, which basically says, briefly describe the organization's mission or most significant activities. So here's 3 different examples of how organizations answer that question. First thing, well, this organization must not have a mission or any activities because it's blank. Second one says charitable. Well, that doesn't really mean a whole lot to me. I mean, most organizations I'm going to assume are charitable. But then look at the one on the bottom. You know, so very specific. We serve 6 regions, save lives, and fight for a world without cancer. Very descriptive. It's short, concise. We typically would say there's an opportunity for this statement to flow onto our Schedule O, which is your continuation schedule. We would like to see that that's not flowing. We want to see that you can read it right in that first page. Part 3 is your mission and program. To me, this is one of the most important parts of the return, and this is really the opportunity for your organization to paint a picture about the great things that it's doing. So first, we have an opportunity to say, what is your board approved mission statement? And a lot of times we see organizations trying to put a real big narrative in to this mission statement, and it really shouldn't be that. It should be, what's that mission that's been approved by your board? Because you're going to have an opportunity to tell about the accomplishments later down in the next section. There's also a part that asks about significant changes in your programs, either things you've discontinued or new programs. One of the key things with the new programs is this is, one, it's your way to talk to the public about the new programs, but it's also your way to let the IRS know that you've started doing new activities and how those activities continue to further your exempt purpose versus being something that's unrelated to your exempt purpose. If you've chosen to discontinue programs, explain why. Let your reader understand the rationale for the discontinuing of the programs. And then there's this section where you get to tell your story. Provide meaningful statistics, but make sure that what we're putting here is consistent with your annual report, your financial statements, your website. If you have numbers and those statistics in there, they better tie, or at least you should be able to explain why they're different than what you have in those other public documents. I always recommend to my clients, this is a great part of the return to ask someone in your public relations department to get involved in. Have someone who is the person that's out talking about the organization. Nothing against finance people, but sometimes they may not be the right people to put this information together. If we're the finance people focused on just the numbers, we sometimes can miss all of the great storytelling that we want in there. In this area, I also say, provide enough information, but not so much that you lose readers. Again, this section has the ability to be carried over to Schedule O, but sometimes you can see people writing books and it gets really hard to read all of that information. So be as concise as possible with providing meaningful information. So here's a couple of examples. Again, the first one, couple words, very concise. Or the second one that is actually talking about very similar programs, but gives a little bit more information, helps the reader to truly understand what the organization's doing. For me, there's nothing, one of the things that will raise a red flag in my mind is if I read the Part 3 statement and I still can't understand what this organization is all about and what they're doing. Part 4 is a checklist of all of the other schedules that are going to be required. Unlike other parts of the form, sometimes answering yes here isn't always a positive thing. So there's a question that asks, did your organization engage in political activities? Well, if you're a 501c3 organization, you're prohibited from doing political activities. So therefore, a yes answer here is actually a really, really big red flag. So that's something we don't want to see. It could identify excess benefit transactions. We'll talk about that a little bit later because that's going to be a schedule that gets triggered. But these are transactions you entered into knowingly or unknowingly with someone who's an interested person, where they've received a benefit in excess of the services or the property in exchange. So these are, you know, potentially taxable type transactions to that individual that benefited. Transactions with interested persons. You can have transactions with your board members, with your other interested persons. That's not precluded, but making sure we've got the right information to disclose why and how you entered into those transactions is important. And then any yes answer is going to require a schedule to be attached. So making sure that those schedules actually are attached. There's also another section that looks at other filings. So this is kind of a checklist of here's some other types of tax filings that might need to be filed. There's a part here for the number of 1099s and the number of W-2s. If I see a tax return that has compensation showing that's being paid to the officers, and there's a 0 in the 1099 and the W-2, that's going to raise a question to me. Sometimes that makes sense. Sometimes the compensation's being paid by a different entity, and in that case, it really makes sense to put some explanation in the return so a reader gets that full story. There's a question here on gaming. So if you are filling out Schedule G and you're reporting that you have gaming, but you aren't saying that you're issuing any W-2Gs, which are what's issued to winners in gaming, does that make sense? Why is there a disconnect if there is a disconnect? If you're saying you have unrelated business income, are you actually filing the 990T? If you say that you have foreign activities back on Schedule F, does it make sense for you to say that you don't have any foreign bank accounts? Oftentimes it does, but those are questions you should be thinking about and making sure that there's consistency between the different parts of the return. Here's another example. If you have special events, there's a question that asks, did you receive a payment in excess of $75 made partly as a contribution and partly for gifts and services provided to the payer? This is this quid pro quo concept. We see this with special events. If a donor gives you $100 in order to attend your gala, and in exchange for that $100 ticket, they're going to receive a meal, you need to be making sure you're notifying them of, thank you for your donation of $100. In exchange, you received goods and services valued at $20. So this is that question asking if you're actually providing that disclosure. So if you have a yes on A and a no on 7B, that's going to be a red flag. And there are penalties for failure to properly do this disclosure. So this is another place where, you know, making sure that these are consistent is really important. With that, I'm going to turn it over to Deb to jump into some of our governance and compensation areas.
Perfect. And to Kim's point about being consistent throughout the form, I mean, so many of these returns are filed electronically now, and the IRS is doing data queries on how you're reporting certain information. So it's really important that you take the time to ensure we have accurate responses and that it makes sense throughout the form. Now we're going to move into the governance area. And for those of you who have heard my 990 presentations at committee meetings or board meetings, I generally refer to this quote. There's several questions in the governance section that are not requirements for tax exempt status, but the IRS does believe that there's such a strong correlation to having these best practices in place and being tax compliant that they ask you about it in your 990. And so the first part of the governance management and disclosure reporting focuses on the governing body and management. And so here we've highlighted some of those specific items that are asked about. So for example, if you have any significant changes to your governing documents, you're required to describe those. Not everything is going to meet the level of a significant change, but if it does, it should be described in a narrative format. In addition, if there's individuals that are wanting to know maybe more about the structure of your board, they're going to come and look at this section. So oftentimes when I'm looking at a 990, let's say it's an organization that might be classified as a supporting organization, meaning they're tax exempt because of their relationship with another nonprofit. Depending on how that is structured, I would expect to see certain disclosures here on who's electing your board, how is that structure handled. So again, just something to be aware of in addition to other aspects of your return. And these questions really are trying to drive at how effectively is the organization being managed. And within this part, questions 1 and 2 are often viewed together. So Kim, if you want to go to that next slide. Here's an example. So we're showing on line 1A that we have 5 voting board members at year end. Line 1B is showing 0 of them are considered to be independent. And that's because all 5 of them are receiving compensation from the organization. And then question 2, where we're talking about, are there any family or business relationships amongst the board? We're saying yes. And in this case, it was all of the board members are actually brothers. So this isn't against the law, you can have this, but again, it goes back to the perception. How is this organization being effectively managed when we have no one that's considered independent on the board because of all of these relationships? You know, I think it's really strong to be able to show a majority of your board as being independent. I think that's an expectation from regulators and the public these days. And as Kim mentioned, this information flows over to page 1. So when people are accessing your 990, right after they see your mission, this is one of the first things that's presented on the front of your 990. And another example of a question in this area relates to the diversion of assets. So regulators are very interested in this information, and GUIDESTAR actually provides this detail to the FBI. So here are 2 examples of what disclosures might look like in this area. You can see the first one is very brief. So it's saying the board of directors found upon inspection missing funds from the cash register located at the pet adoption center. The employee was terminated, but issue was not legally pursued. If I'm a reader, I would think, I'm wondering if there was a better way to handle that. Then if you compare that to this second disclosure, where it's much more detailed, it's talking about after it was discovered, all of the different processes and procedures that the organization went through. To me as a reader, I think that provides me much more comfort that yes, while this happened at the organization, they had a very professional way that they dealt with it, and they're being very transparent about how it was handled. So again, just when these issues come up, it's all about how you're portraying that information back to the public.
Yeah, and Deb, I was going to jump in to say, I think this is a really great example of, there's a lot of the stuff that's in the 990, there's not a black and white as to what has to be included in the narratives. Like for this question, the instructions will say, you know, provide a description of the transaction. So it's up to the organization to decide, well, how detailed do you want that to be? So this is where, you know, having the board be part of this kind of decision making as far as how much are we going to put in, how much are we going to disclose, versus having this be a decision that's made maybe just at the finance department or just within the organization. Maybe that's where it starts, but I think it is important for the board to understand, because again, this is something that's going to be out there. It's, you know, it could end up in the newspaper. How do you want to have that public perception?
And another section within this part of the 990 focuses on policies and procedures. So there is actually a specific question about the process for reviewing the 990, as well as all of these other questions on policies. And again, I'll state, it's not required that you have these things in place, but you want to be able to check yes to this. That means you have adopted all of these best practices for policies and procedures. And I would say at a minimum, you should have a conflict of interest policy in place. I think that's kind of expected these days that organizations have that. You know, maybe it doesn't make sense to have a whistleblower policy for your organization, but if you have a lot of volunteers, a lot of activities related to that, I think that one probably rises to the level of something that should be considered. So again, this is a really good discussion to have at the board level of, have we gone through the process to adopt these? And then once you adopt them, you actually have to review them and apply them consistently to your activities. The last reporting in this part has to do with disclosure. So at the beginning, we talked about the requirements to provide information to the public. This is where readers can go in your 990 to understand how you actually make these documents available. So you can indicate that you provide your 990 upon request, that you're putting it on your website. It also asks about how you make your conflict of interest policy, governing documents, and financial statements available. Again, it's not required, but I would say most organizations will tend to say, we'll make these documents available upon request. You could have organizations that indicate these are all out on our website. Again, it's a good discussion to have at the board level for what your organization wants to do related to access to those documents. And another heavily viewed area of the 990 is compensation reporting. So in this part of the 990, you're listing all of your board members that served during the year, officers, key employees, highly compensated employees, and even former individuals if they received compensation. There are certain dollar thresholds that get applied for whether someone makes it to the return or not and how they're classified. But again, I think this is a really important section to be aware of. We commonly will see returns that list individuals in this part, but they say 0 hours. And to me, that raises the question of, well, who's actually running and managing this organization if we're saying no one is spending any time doing this? So make sure that you have hours in there, and that should be average weekly hours. And we also suggest that a best practice is to include additional titles where it makes sense. So sometimes you'll see a return where you have a board member or an individual listed, their title will say director, and then they'll have a large sum of compensation that's reported in this part. The question I would ask is, are they being compensated that dollar amount just for serving as a director, or do they have some other type of role within the organization? So what we'll typically do is put their title as director, but then do a slash whatever their employment title is at the entity, because that helps a reader connect the dots that, yes, they may serve on your board, but they're actually being compensated for this other role within the organization. And you'll also want to just be aware of the compensation from a dollar standpoint. So if you're pulling other 990s, how does it compare? And even just how it looks compared to the other individuals that you're reporting in this part. And if you have any unique situations, we always suggest you can include a supplementary narrative. To Kim's point, you can make this return your return by adding in any type of additional information you want. A common one that we will typically recommend is if you're an organization that operates on a fiscal year basis, the compensation in this part is reported based off of calendar year-end W-2s. So you may have someone who joins your organization at a certain point in the year, and they're listed in this part, maybe as an officer, but we're showing 0 compensation. We typically will put in a narrative to describe, or even put after their name, the date that they started, because they would not have received that W-2 that fell within the calendar year of your reporting period. So there can be some nuances related to that, that just some additional narrative can really help clarify to a reader. And then functional expenses. I'm sure you're all very aware of functional expenses. Many readers will still focus on this and make judgments about how you're spending your charitable dollars and how much of it is going towards programs. So they do this by looking at this part of your 990, and they can take your total program expenses divided by your total expenses to come up with what your percentage of program service expenses. I won't get on a rant about how you can't look at that in a silo and need to take it into consideration with other things, but I think it's something that you need to be aware of because people are still evaluating organizations based on this one factor. I say that it needs to be looked at in conjunction with other things. So if you're an organization who relies on volunteers to do a lot of your activities, I would say you're going to be expected to have a higher program percentage in this calculation, simply because you're not expending funds for staff to do your activities. Where if you're more of a direct service provider and compensation may tend to be one of your higher expenses, it would make sense that your program service expense percentage might be lower. So again, just things to be aware of and what readers might be looking at related to that.
There was a question that came in that I'll just touch on quick before because we get this question a lot, and that's with respect to who should review the 990 in response to that question, and then whether just distribution to the board is enough or if they have to approve it. And there's really two questions, and one is, does your board receive a copy of the 990 prior to being filed? So that's a yes/no question. And in order to answer that question, yes, your board has to receive a copy. They don't have to approve it. They don't have to have a discussion about it. They don't have to come back and answer the questions. They just have to receive a copy. And it has to be the full 990 that's being filed with the IRS. It can't be the public disclosure copy. So if you redact the names and addresses of your donors before you give it to the board, which we do have some organizations that do that, then technically you're not answering that question yes. And then it asks describe your process for review. And that's where, you can say it's prepared by an external accounting firm. Our finance committee reviews the return and approves the return, and then a copy is provided to all board members prior to filing, and that's perfectly okay. So it doesn't require that your board has to actually approve that form before it's filed. All right, so we're going to move into some of the schedules. So the parts that we've talked about already are the parts of the return that every organization has to complete. The schedules are completed based on the type of organization and the answers to some of those questions that are in part 4 of the 990. So Schedule A is a really important schedule that's completed for organizations that are public charities under 501c3. And this is to verify those organizations' public charity status. Organizations that are public charities, if they fail to meet the requirements for the type of public charity that they are, it can result in private foundation status. Now, private foundation status, we aren't going to spend any time getting into, but that's not necessarily a bad thing. It's just that private foundations are subject to different rules than public charities are. So you need to make sure that you would be aware of what those private foundation rules and restrictions would be if the organization can't meet the public charity test. There's 2 or 3 primary types of public charities that we are going to see filling out anything on Schedule A. One is a public charity under 509A1. This is an organization that's broadly supported by contributions. And in this case, after the calculation is being done, and there's some restrictions on how much in the calculation you can include from each donor that's not another public charity. Basically, when you get to the end of the calculation, the amount of support that's coming from the general public has to be at least 33 1/3 for the current year and prior years. And this is a 5-year look back test. There is a facts and circumstances test that organizations can meet if their support is above 10%. The other type of public charity is under 509A2. These organizations would complete part 3 of the test. And these organizations receive both contributions and payments for services. In this case, the public charity percentage has to be above 33 1/3, and there's a restriction on the amount of investment income that organizations can receive. So there's a calculation of investment income, and that has to be below 33 1/3. Supporting organizations are a type of public charity that get their status by virtue of their relationship with other organizations. There's a whole section of Schedule A that needs to be completed based on the type of supporting organization. This is a really complex area, so if you are a supporting organization, you should expect that there's a fair amount of information being disclosed in that section. Couple other schedules, obviously we're not going to touch on all of them, but some of the key things that we think a board should think about. On Schedule D, there's a roll forward of your endowment. So thinking about what picture does that endowment growth and usage paint for your donors. No right answers, wrong answers, but it's more of a thinking about it and an awareness. Schedule D also will have a reconciliation of the tax return back to the audited financial statements. So boards are typically seeing those that audit financial statement at the completion of the audit. They're seeing the normal financial information on a monthly basis. This is a connection between the audited financial and the 990 because there are some things that are reported differently between the two. Schedule F, which is a schedule of foreign activities, you might think, well, I don't do anything foreign. I wouldn't ever have to have this schedule, but it's important to know that if you have alternative investments, there's a possibility that some of those investments you're holding either are direct investments in foreign entities, which would require you to fill out Schedule F. So Schedule F isn't just conducting activities there, but it's also making investments in a foreign country. Schedule I is the schedule of grants. So grants that are being made either to individuals or to other organizations. There is a part on Schedule I that requires you to describe how you ensure that the funds that are being provided are being used for the purpose for which you provided it. Sometimes we'll see that that section is blank, and that really, is a place for you to describe best practices with respect to, we ensure that when we make a grant to, maybe it's a scholarship to an individual, the scholarship is paid to the school. We ensure that the individual actually completes the courses, that we have processes in place. And then sometimes we'll see that when you read what the organization does, it talks about grants to individuals, it talks about grants to other organizations, but then we don't see a Schedule I, or we don't see in the statement of functional expenses grants to individuals or organizations actually listed on lines 1 and 2. And instead they get buried down in other expenses. So think about your organization. If you are making grants, those really should be properly disclosed, and this schedule should be completed so it's transparent as to who you're making those grants to and for what purpose. Schedule G is the schedule of special events, fundraising, gaming activities. This can be a very overwhelming schedule for people because of how the reporting gets done. But on the first page, you're reporting professional fundraisers. And it's really important when you look at this to think about what message is being sent. So sometimes we'll see that you're disclosing payments to a professional fundraiser, and you also have to disclose how much that professional fundraiser raised and how much was actually submitted to the organization. And when you have situations where those numbers look funny, so you paid the professional fundraiser more than they actually brought in and more than you actually received, that's going to make a donor feel somewhat uncomfortable. Now, sometimes there's special situations. Maybe you have a 3-year capital campaign and you are just in the beginning of that, so you're paying that fundraiser, but you haven't seen the money actually coming in the door. So this is another one of those places where you might want to put some explanation in on that. When we report special events, this can sometimes look really funny because we pull out you take your gross revenue, you're going to back away from that, the portion that's treated as contributions, to come up with your net receipts from special events. Then you apply your expenses, and sometimes, in fact, I would say a lot of the times, that's going to actually come up to a negative number. So it looks like we lost money doing a special event, but really you didn't lose money because you take into consideration those contributions that were earned. But making sure that that makes sense to the organization, and if someone asks the question, you could explain it. And then if you're conducting gaming, every state is going to have rules with respect to how gaming has to be conducted, making sure that you are aware of those rules and you're following the rules. Schedule L is our transactions with interested persons. Two of them that we're going to talk about here are loans to or from interested persons. And again, there's nothing that says you can't enter into these types of transactions. What's important is having the procedures in place, either through your conflict of interest or other procedures, to ensure that these transactions are known about, and that someone, ideally the board, independently is approving these transactions. So here's an example of a loan that was made from the organization to the president CEO. So you probably want to explain a little bit why this was being done. Now in this case, we're saying it was approved by the board. There was a written agreement, so that's good. I would expect that we're going to see some more narrative down in the narrative section to explain the reason for this loan. Transactions with interested persons, we see a lot of these, and again, it's not bad, but we want to make sure that we can answer the questions before someone that's reading it has to ask. In this situation, I would look at this and say, interesting that they didn't tell us the amount of the transaction. So there's a rental of property from a key employee, but we're not explaining the amount of the transaction. Again, not that you can't rent property from a key employee, or a key employee can't rent property from you, but you'd want to make sure that there's full disclosure of the terms and what process you went through to ensure it's really in the best interest of the organization. And then we'll wrap up with Schedule O. And we've mentioned this throughout our whole session. And Schedule O is kind of the overflow or the other schedule. Unlimited amount of space. There's certain things throughout the return that you're required to disclose on Schedule O. And then, as we've mentioned, you can put as much narrative as you want into Schedule O. So it helps to provide that additional clarification. As you read through this, read everything from the general view of the public. So make sure that as you read it, someone who doesn't know the organization would understand what you're trying to say. And we'll put our little pet peeve in here, double check the spelling. This is a public document. This is your best foot forward. Let's make sure that it reads correctly, the spelling is all correct, and it really talks about the great things that the organization is doing. So with that, we are at the end of our presentation. The question here is, will you be joining us for future webinars? I will let you know that the third in our series with respect to board best practices is going to be on November 16th from 11 to 12 Central Time, and that is understanding and using non-for-profit financial statements. So we hope that everyone who's here today will be joining us for that session. It will not be Deb and I presenting. You'll get to hear from two of our audit partners, but we really hope that this information has been valuable. If anyone has additional questions, we can stay on the line for a few minutes and answer those questions, or we will respond in the Q&A or via email. So thank you so much for your time today. Hope everyone has a great rest of the day.
All right, did you guys want to answer the two in the Q&A, or did you already do that? I'm sorry.
You know, the one on the valuing of assets, I think that is one I might encourage you to ask in our next session, where we're going to have our auditor friends who are probably much more capable to get you that answer. And the other one here is, if you become a taxable cooperative and do not need to file a 990, what info would you recommend to still have available on file to provide to the public if requested? I guess if you don't have a 990 filing requirement, it would probably be just best practice to continue to keep those things that you would have had on hand when you were filing. That way, if you're asked, it's up to you on if you provide that information, but there would be no requirement to do so if you're not tax exempt.
We just want to thank everyone so much for attending, and thank you to our presenters.